Tell you what it is, there it is right now. It's actually off this afternoon. We're still doing fairly perkily. Well, to discuss all this, I'm joined by Tom Stevenson. He's the investment director at Fidelity. Tom, this time last year, everyone was saying Trump was going to be a disaster. He was going to crash the American economy. Well, he's actually been pretty good for investors, hasn't he?
It's been a fantastic year for investors in the US stock markets. The main index, the S&P 500, is up about 20% this year. The Dow Jones 25. The technology-heavy Nasdaq index is up nearly 30% this year. So yeah, absolutely right. This was going on before the tax reforms, but recently, in the last week or so, this has given the market a real fillip.
I mean, in market parlance, it's always better to travel than arrive. I mean, are these tax cuts now fully priced in?
Well, we're seeing that today. You said that the market is just off slightly, and that was off after new records for all three of those indices yesterday. And we've had 70 new records this year alone. That's the highest ever. As you say, the Nasdaq is through 7,000. So is it better to travel than to arrive? Well, certainly when you look at the headwinds facing the American market, there are quite a few. Valuations are pretty high. Yeah. Now, you could argue that if these tax reforms do go through, and it looks very likely that they will, then actually earnings for American companies could rise by about 10 to 15%. So that will actually make American shares rather cheaper than they seem. But valuations are undoubtedly higher in the US than the rest of the world. And, of course, the other headwind is the Fed. Yeah. Interest rates have risen 3 times this year. They're very likely to rise another 3 times next year. So I think that what we've got with these tax reforms is they probably buy a bit of extra time, but we are at the back end of this bull market. There's no doubt about that.
And as you say, although those indices have risen very strongly this year, are there many opportunities left for investors in the US markets?
Well, I think a lot of the opportunities actually do arise because of these tax reforms. So the companies which are really going to benefit from the tax cuts are the domestically focused businesses, things like oil refiners, the banks especially, and that's true if interest rates rise as well. That will help the banks. And that's actually why one of the biggest beneficiaries has been Warren Buffett's Berkshire Hathaway, which, of course, has invested in a lot of these rather dull, old economy businesses, but, of course, are going to be a big beneficiary of the tax reforms. And
what does it mean for the rest of us, Tom? Philip Hammond last week, along with a number of his Eurozone peers, all wrote to the Americans saying, well, hang on, this is going to have a deleterious effect on the European economies in some cases.
Yes, well, I mean, I think that, the good thing from a market perspective is that, when they say that when the US, sneezes, we all catch a cold, and it works in reverse. If we do get another year of growth in the US market, then that's plainly going to help the markets in the rest of the world. But from an economic perspective, I mean, Donald Trump is clearly putting an America First agenda on the table, and so that is going to harm other economies at the expense of America.
I guess the German government and others, if they're so unhappy about it, could cut taxes themselves for companies.
Well, I mean, you do run the risk there that you get a race to the bottom on corporate tax rates. But I mean, most markets have got an edge on the US. I mean, starting from 35%, it's going to cut down to 21%. I mean, pretty uncompetitive tax rates. This will bring them down to much more competitive rates.
Very briefly, Tom, any sector in particular catching your eye in the States right now?
Well, I think that the banks look most interesting because they get a double whammy from these tax reforms. Their profits will rise because of the tax reforms, but also if interest rates are forced higher because of the extension of the deficit, then that also helps financials.
All right, Tom Stevenson from Fidelity. Good to see you as ever. Thanks for joining me.